we can run through what the market is looking like now. This is Solana. We'll start with Solana. This is a 3-day chart for Solana, and it actually argues it is coming back to a trend line resistance, hitting that each time, then slowing a bit down. Now, while it actually does that, it is also something important to state that the trend line is a rising trend line on both ends. And that's why it actually looks like a rising wedge. And as majority of us actually understand the fact that a rising wedge pattern, if you go check, take the Google images, don't take my word for it, check at majority of candlestick price action, whether it's stock market, whether it's Forex, whether it's crypto, you kind of see, okay, majority of the times this happens. Now, what is the actual strength of this trend line? You slowly start zooming out and you see, okay, that has been there all the way from 2023. So that seems like a strong resistance, yeah, which was a support before, which then broke to the downside, making another continuation pattern. So right now the equation is, as I told before, you're coming down, you're doing this. So what should happen after that? If you take this, you'll understand, okay, rising wedge shows it's a reversal when you're coming up. Rising wedge argues it's a continuation pattern when it's coming down. So on both fronts, you kind of have an idea and understanding that the market is actually trying to do something crazy. And these are clearly observable when you're on a shorter horizon charts. These kind of shows you, okay, watch. This is exactly what's happening. There's an enormous amount of volatility. It's going up, it's coming back down. I mean, there's a lot of movements. Yeah, the bottom and the low was 207, and then it actually went up to 217, close to 218. It is very much choppy, but then that is where I want you to understand the fact that yes, it is volatile. Yes, it is doing a lot of these things. But at the same time, why is it so? Yeah, if it is a bull market, if it is a all season, why is that thing not going parabolic? That is one of the primary questions we have to ask ourselves, saying like, okay, if that thing is actually going against you, what is the price action with respect to the strength? Is there enormous amount of strength pushing that asset against you to the roof? You're like, okay, the volume doesn't actually seem like it is going through an enormous phase of increase. The price is actually staying there. It's not moving much, yeah, in terms of volume side of the equation. So even though you see a lot of movements are happening in the price action side of the equation, you start zooming in. Okay, where are we right now? The price is reaching a point where it came rarely over last 2 to 3 years. Now, you also can see the fact that each time you come up here, you have something like this, which is a bit strong. Meaning each time you do that, now you're like, okay, fine, I can see that the price is pushing higher. I can understand the fact that a lot of people are jumping in and buying in here. So think about what the exchanges would be doing here. If you are going into an exchange, you're trying to buy from there, what would be the central point, base idea for that particular exchange? Who is executing those? You're buying from that exchange. So basically they're selling it to you. And big guys are selling at this point, and that's why we call reversal areas to be like this. It usually is a bit crazier because they kind of have a basic idea, basic understanding that this is coming, and they always look up to it. One of the primary reasons for that is that they know these basics. They have been there in the industry for an extended period of time. Now, say you pick up another asset, you pick up Bitcoin. When you look at Bitcoin, what you notice or what you understand is that just like what you saw here on Solana, on a shorter horizon or on a macro horizon, you kind of get to see something similar on Bitcoin too. There is enormous amounts of volatility in the market. So when you notice the fact that, okay, fine, I get that. The amount of volatility here is so high. That means the liquidity providers, the whales, they are trying to take benefit of the retail liquidity at this point. Now think about it like this. When the price is going up like this, I mean substantially higher like this, these are the points where the market, the retail, is thinking too much on the bullish side. Good. Now you come back, look at Bitcoin itself and ask yourself, this was that support region. Do you agree? That's a 3-day chart. And that 3-day chart now shows you we closed below that and we're staying below that daily close a couple of times. You have the 3-day candle close happening just at that point. So basically speaking, if you look through these, you can look for long wicks. Now, say you come back into the same and you put into Japanese candlesticks and you put in a decent time frame. Say you pick a 4-hour chart. Do you see this? There's enormous amounts of liquidity coming in. You can see these long wicks, and then there is kind of a movement to the downside. So these long wicks are always going to stay there, doing things in this kind of a crazy manner. For sure, there is no doubt on that front. But that is where you actually ask yourself, okay, if I'm observing that kind of a long wick at these highs, what really is happening? Who really is buying? Who really is selling? And that may actually give you a ton of answers. Say you pick up Bitcoin, or say you pick up Ether. It's one of the biggest assets on the alt market side, which everyone is looking up to right now. So when you pick up Ether and look at this trend line, that trend line started going up from 22nd July. Good. So it was trending to the upside from that time, but right here, right now, what you are observing is the fact that we're coming back to that trend line, testing that trend line, and we seem like a little bit weak. So if you break that trend line, where is your support going to be? And that is one of the points which I've raised before, asking a question like, okay, this kind of a run up, how sustainable is that? How high do you think it's going to go? It's going to continue in that pattern. Historically, we've seen things like that happen, and it shows you 1, 2, 3 leg. Yeah, the one is very small, as we all know. The one is very small. The 2 goes up like this, and 3. Now we do the corrective A, B, C. So if we have actually done that, then this is the 1, this is the 2, this somewhere is the 3. So now the A, B, C. So where are we? Are we doing the A and B here? Are we going to go for the C? We don't know. So that's one of the reasons why we say watch the macro market and understand the narratives. If you look at the Middle East and what's happening in Iran right now, you'll be asking questions. Okay, why is that happening right now? Yeah, then you look at Russia and you're like, okay, there is something. So the market is awaiting something, or the big guys who know something is acting upon it. They are literally waiting, they're taking action. That's one of the reasons why one of the biggest assets in the crypto market is slowing down from $125,000. It's now down to 110, 112 region. So the moment it breaks 110 again, it is going to be in a panic mode. It's going to bring a lot more people. Say you pick up XLM, you're watching that it's testing a regional support. If that support breaks, it is going to be very hard for that asset to hold on till the next region of support, which is somewhere down here. Get? Now think about XRP itself. This is the local region of support which we are holding on to. Yeah. So at this support, we've been staying there, but we've been also putting in a pattern like this. So are we going to break that to the upside? Are we going to break that to the downside? I don't know. But right now, what's the moving average? On a 3-day chart or on a daily, you kind of get the sense like, okay, the moving average on a 3 days flirting with the price. A daily, the price is below the moving average, pulling the moving average to the downside. So the longer the price stays below the moving average, the quicker the moving average itself tilt to the downside. Now, a lot of people ask, like, why would you care about that? I'm like, okay, watch. When the moving average is pointing you to the upside, price kind of says, okay, I have one more bounce. I have one more bounce. But the moment moving average gets saturated after one genuine trend, it usually is a reversal point. You may see something like this, a 50% drop. Yeah. Now watch, the moving average was going up, but it did not get the momentum like this. And now it's slowly starting to get saturated here. So if that daily stays below the moving average on a daily chart, then eventually in a day or two, you will see that the 3-day chart is also doing that kind of a thing, which would then pull the 3-day to the downside. Okay, good. Now we go watch the weekly because that matters a bit more. The weekly support region here is at $2.6. And we know the fact that regional support of $3 is very important for XRP. If it actually breaks through that 2.9 regional support to $3, people would start thinking again, okay, are we going much lower before a run up? How low are we going to go before we run up? Like the argument of XRP going to $10, I don't think anyone would deny that. But the basic question would be when? You get to see the 1, you get to see the 2, you get to see the 3. Now, if you're a swing guy, now if you're a perfect aligned Elliott wave guy, you'll say this is the 1, this is the 2, this is the 3. We're doing the A, B, and we just saw what the C looks like in a lot of other assets. Why is that important? Because this trend line has been there for an extended period of time. Your support somewhere is, your support is around 0.6, 0.7. I'm like, okay, that looks crazy. For us, it's hard to agree on that. For sure, it should be hard, right? When you look at these, you're like, I don't want that. But then you go look at XLM. Like these are highly, highly correlated assets, which we have seen in the history. And then you pick up this and say, oh shit, this asset has shown us it abides by these rules and it has played out such a rule a long time before. Like 2017, 2021, 2024, we've hit those resistance and slowed down multiple times. Now the trouble is, if you put in a lower high, a swing lower high, now you have way more resistance because the sellers genuinely enter. So as this is becoming a swing lower high, that brings in more profit takers, that brings in more sellers. So naked charts would be slowly piling in. This break here, that should bring retail shorters, not the whales. They would be shorting here at close to this region. Now, you don't have to be specific, perfect, getting the absolute top. You can miss the top to a huge margin and still be accurate. Listen carefully, yeah? The top here was 0.97, but even if you shorted here at 0.6, you missed 60% of the run up. But you were very close to that resistance. That's the point. Like you think about this. If you look at this, that was the bottom for sure. But if you shorted anyway here, that was still perfect. Yes, you missed 65% move, but you were still close to a perfect alignment. This is what I'm arguing with you guys. I'm putting that point to say, when it is close to a resistance, you know what to do. When it is close to a support, you know what to do. Trouble is, majority does not do that. Because the market is this volatile, like put it on a micro scenario and see what's exactly happening. Like an asset which rarely used to move a couple of months back is now doing this. From 211 all the way up to 217, $5-6, just like that, moving up, coming back, coming down. It's enormous amount of volatility. Now, why is that? It came back up to this point, it put in a lower high. Yes, it is on a shorter horizon, a micro horizon. But then when you slowly start zooming out, you start to observe something. Okay, these were a top. These looks like a top, but the RSI is going down. That's a 15-minute chart. Now we go to the 30-minute. The 30-minute says, oh, I'm going down from some time. You're like, okay, there is something to watch. Now we go on an hourly and it says, yeah, I agree. There is something wrong. So the moment you start to realize, the higher the time frame you go and you get clarity on, the accurate it's going to be. But the trouble is, it's going to be very, very volatile at this junction where it's about to flip. There's going to be long wicks to the upside, long wicks to the downside. Supply and demand kind of clashes with each other. So at this region, make sure you're not trying to get those long wicks because you want that specific top of 30, 40, 50% run up rather than looking at this next 12 months down. Yeah, because the average you need to think about is this was the top, I agree, but the bottom came in here. That was like 2 years. This was the top here, the bottom was here. That was almost 1.5 years, 2 years. So that is the time horizon I'm talking about. If you're focusing just on this point here, thinking like, oh, no, I want to pick that top. That's a 50, 60% run up. Then you miss the point here. This is what's coming next. So if you're not aligning yourself with this kind of a move, you may answer yourself in 3 months from now, 4 months from now. You look at the chart and say, ah, shit, I shouldn't have tried to get that top, the run up at the peak. Rather, I should have positioned on the opposite side, or at least on the sidelines with the dry powder to get a confirmation and then go in. So if you guys received value, smash that like button. I'll meet you guys in the next video. Bye for now.